Good morning, traders. My name is Brad Matheny. I've been asked to kind of help explain what I do and what Mint.com is all about. Obviously, I tried to put it together here in the website for you to make it fairly clear, but let me give you a personal overview of what I do and how you should use it, at least how I think you should use it and what I try to teach you. First off, for over 25 years, I have been developing advanced trading and financial modeling systems. Included in that is artificial intelligence, predictive modeling, what I call adaptive learning modeling, which is mathematic quantitative modeling systems that learn as they go. In the late 80s, early 90s, I was involved with a software project, financial software project called the Candlestick Forecaster software series, which at that time I built a modified version of a neural net. It was mostly an inference engine designed around prototype adaptive technology. At that time, it became very popular. I got to travel around the world quite a bit, and that really got me involved in the financial industry in the early 90s. But now what I've been focused on is automated trading systems, advanced financial modeling systems, and building, really high level macro and micro environment type solutions. So it comes down to the services that I'm offering you with Mint.com comes down to three key elements, really three key elements. Number one, I'm giving you the high level Mint rotational modeling system investment strategy, which beats the S&P considerably over the last 15, 20 years. A lot of these systems you'll see will show, decent returns, moderate risk, maybe only show data from 2008 or 9 or 10, the bottom, trying to ignore what happened in 2000 and 2006, 7, 8, and also minimizes, risk exposure. If you start your back test in 2008, 9, 10, you're really not really seeing some of the biggest drawdowns we've seen in the past 20, 25 years. But understand the Mint rotational modeling system is very simple. It only trades the S&P, and it is consistently performing quite well compared to the S&P, and is very doable for investors. Remember, I do the research, you make all the decisions. So when I show you what's going on with my Mint rotational modeling system as an investment strategy, this gives you the ability to go to your broker or your fund manager or into your IRA and select funds. It's ideally telling you when you want to be risk on and deploy your capital into bullish trending strength and or risk off, which means move your capital away from risk into something that's more consistent, possibly into cash, possibly into other assets, avoiding the actual risk factors that go on in the market. So number one, I'm giving you an investment strategy. And 90% of all the people that are watching this right now have some sort of a retirement account or a 401k or an IRA, which would contain typically 80, 90% of your assets as your long-term nest egg. Okay, secondarily now, I'm bringing you broad macro and micro environments. So number two, I'm giving you what I call my custom index analysis and my weekly video analysis. The weekly video analysis gives you an update to what to expect 2 to 4, maybe 6 to 12 months out in the future. I'm reading the tea leaves, so to say, telling you what I see, telling you what I believe is happening, showing you charts, showing you data, showing you all of the information you need to stay well informed about what the markets are going to do over the next 4 to 12 months, even longer. Remember, a lot of the research I do behind the scenes here is mapping out huge amounts of data and running my strategies and my analysis systems for you on an ongoing basis. The third thing that I do is I give you proprietary trading signals, which is the TT scanner weekly trading signals and the Mint live trades algorithms. So those are the daily and weekly swing trade algos that are provided to you to try to find new trading setups. And what I'm going to do here is kind of walk you through the entire process. So as we get into what's going on here, my primary focus is to teach you to become a better trader, to help you protect your capital, to learn how to become a more skilled investor and how to see the data in a different light. There's far too many people out there that are really, just reactive to what's going on in the market. And my focus is to try to read what's happening in the market, read what's going to happen over the next 4, 6, 12 months, and use cycle patterns to actually show you what is coming, okay? And that's really what I'm trying to do. Now, from there, like I said, once I've given you the education, I've given you the tools, and I've given you the algos, and given you everything that you need, then you can go in and start making your own trading decisions. So when you create your account, well, let me scroll down and first off tell you that everything is included in one subscription. So it's not hard for you to understand what you get and to pick separate things. Now, I have a lot of people asking for intraday algos. I'm building a solution to that right now. And that will likely be a secondary service that will be added on top of the core service here. If you want an intraday swing trade, it's beyond kind of what I do here. I've kind of avoided it for the past 2 years because I didn't want to get involved in having to handhold a bunch of people every 4 minutes or 5 minutes with trading signals. But long and short of it, right now, everything you get, quantitative member content, proprietary macro-micro analysis, proprietary daily swing trade analysis, custom index macro analysis, risk protection, asset allocation, and clear actionable trading signals is all included in one simple account. $54.99 a month, which again, folks, figure it out, that's about $1.40 a day versus $4.99 a year, which is $41.76 per month, which again is about $1.15, $1.20 a year or a day, gives you access to all of this. In reality, in my opinion, if you're an active investor and you are trying to make decisions to further your ability to grow your account and protect your assets, there is nothing better than having an inexpensive, quality solution that delivers content and research and opportunities for you every day for less than $2 a day. I mean, you can spend a fortune going out and trying to follow these people that pick intermittent trends, and my job is to just keep you on the right side of things, waiting for the opportunity and then pouncing when the opportunity actually takes place. Now, remember, on my website as well, I offer a whole bunch of fully automated trading systems. If you're into trading in the futures markets or the equities markets, check these out. We're developing quarterly subscriptions for these right now. I'm going to be in the range of $3.99 to $6.99 per quarter, and I'm going to be putting more resources available for fully automated systems for people that want it. Okay, so now when you get into the second stage of what I do, really what I'm trying to teach you is trade only when opportunity is the richest for profits. Protect capital at all times. Learn the mechanics of intermarket dynamics and custom indexes with my proprietary algos and custom indexes, and explore fully automated stock and futures trading programs, and or learn to become a better trader overall. Let me show you kind of how this works. My plan is, and this is what I really try to teach you, which is what we're going to go over next, is rotationally modeling system sets overall primary objectives. And again, this is really true. The rotational modeling system, as I run my strategies, becomes the lead, the primary actor in how I make decisions and what I'm attempting to expect. The custom indexes deliver extended market context and expectations. Mint.com live trades and TT Scanner hot lists generate daily, weekly swing trades for us to take. and personalized research and interpretation, which is delivered through my videos, allows me to communicate with you more effectively and clearly, more clearly, than trying to spend 2 hours writing up a bunch of stuff that you guys might not actually read. So the videos are extremely important. So now let's come back over here and show you basically how the allocation model works. So number one, when I set up the allocation models, it basically breaks down into what's called a top level structure. And this is the top level structure right now. So if you had $200,000 in allocation and I was advising you to maintain a 50% cash reserve and then break your trading into 80-20, as we've done with the remainder, you would essentially be reminded that it's important to create a substantial cash reserve while we're dealing with excessive risks in the market, and that would allocate roughly 80% of your remaining capital into a long-term investment strategy, whereas 20% of your capital would go into a trading account. So understand that when you get into this type of mode, this is really a risk-off mode. Your trading allocation would be $20,000, as shown here. You would set your risk level effectively. Maybe because we have such small levels, you would set your risk level to 12.5%, which I can increase here a little bit. And if you were to then allocate 10 trading slots, and I will explain what trading slots are to you, we would then be capable of taking 10 total trades totaling $2,000 each with a max risk per slot at $250. That means you can still take trades. You're just going to be very conservative about your trades. You're not going to trade more than $2,000 per slot. And that allocates essentially your $20,000 trading account into 10 available open trading slots. Think of these as a mailbox with 10 mailboxes in it. So a big congregated mailbox with 10 open slots. You can take as many trades as you want. So hypothetically, you can come over here and you can create 20. But the reality is that you will only have about $1,000 to trade each one, but you can trade as effectively as you want. Typically 10 or 15 is efficient. That's all you really need, especially in this type of an environment when you're in a risk-off environment. Now, if we were to be risk-on, we might have hypothetically a 15% cash reserve, and we may have a 90% or 85% investment account, a 15% trading account. Now you're sitting over here with approximately 10 open slots, 2,500, risk parameter maybe is going to be 10%. So you have now the ability to trade more efficiently across these 10 setups. Now remember, I do the research, I make the recommendations, you guys decide what you want to do. So even though if I was suggesting a 90% investment portfolio and a 10% cash reserve, you guys could decide, okay, Brad, that's great, but I want to run 80-20, and I want to be a bit more of an aggressive trader. So my cash reserve is going to be maybe 15%. And what that's going to do, ladies and gentlemen, is that's going to put you in a scenario like this, where you'll be able to trade $3,400, $340 risk with a 10% risk level, and you still would have the ability to be effectively protected, move your capital in and out of the markets very efficiently, and your trading would be done by allocating trades using either your own research, your own resources, or my TT scanner, hot lists, or my Mint live trades algorithms. Now your investment capital, as I mentioned to you earlier, runs and deploys with the Mint rotational modeling system, uses the effective allocation levels, and again, watch my videos to learn why I'm adjusting the allocation levels based on risk and interpretation factors. But primarily, there's two things that protect your capital at all times. number one, the cash reserve account, and number two, your investment account running the Mint rotational modeling system. So ideally, if you were to have 2 million in your trading assets, you would then be able to trade on a much larger basis and see what's actually going on. Let me see if I can shrink this down and get this back into line. There we go. Much larger basis. You'd be still essentially taking the same risk. Okay, so understand that 2 million versus 200,000 is a difference of 1 0. Okay, it looks bigger, it looks more aggressive because they're bigger numbers, but in reality, nothing has actually changed. You are still allocating the same level. Okay, so when you go up here to 2 million, you are essentially still running the same allocation levels, the same protection levels, the same risk levels. The difference is you're just trading larger amounts with an extra 0. Okay? The trading capital gets broken into slots. Remember, we have 10 slots here. So with 340,000, obviously, you could possibly go to 20 slots and trade more because you have more capital to be able to trade. The results would be the same, ladies and gentlemen. If you make 3% on 200,000 or you make 3% on 2 million, you're still making 3%. It's just the difference in zeros, okay? So understand that the whole theory here is top level down. If you had $500,000 and I was recommending a 25% cash reserve or a 50% cash reserve like I am, because right now I'm 80% cash reserve, which means that we would be like this. And ideally, your investment account could be allocating some of this cash reserve. So hypothetically, if I was recommending 80% reserve capital for your trading account, you could theoretically be down to 40% cash reserve, and then this would be efficient. Essentially, what you're doing is you're moving your money into the investment account, which is more protected. Remember, the Mint rotational modeling system is a very protected system. It does have its risk factors. It can move 12, 13, 14% against you at times, but it's designed to manage and execute your long-term investment account efficiently. Okay, we are getting ready to move into a risk-on position, which means that what we would be doing is we'd be moving back down to maybe a 15% cash allocation, maybe allocating a bit more into the trading account. So let's go 70-30. And what that gives you the ability to do, again, ladies and gentlemen, is very efficiently manage and execute your trades. Okay? So this is really the 4-step process of how it works. Figure out your allocation levels, then determine how many trading slots you're going to have and what your risk levels are based on what I'm telling you. Then deploy your investment capital using the Mint rotational modeling system. And then deploy your trading capital with either your own resources or the resources that I provide you with TT Scanner and Mint Live Trades. And that's essentially the process. Okay, this is how you're going to become a better trader, by following the rules, learning to become an efficient trader, and then learning to use the resources that I provide you. So let's take a look at Mint Live Trades. And let's take a look at the 2x bullish ETFs. Let's see, first off, if we have any decent triggers starting out. So we're going to look at new triggers. We have ROM is flat. SPUU is a trigger from just a few days ago. It's up 2.37%. We have SSO is a trigger from a few days ago. It's up 1.95%. Anytime that you're fairly early and you have not seen this take half yet, this take half position tells us that we've already executed pulling half of our position out of the trade. So we've already gone to a target 1. Flat, flat, flat. FNGO is up 15% from nearly a week ago. What a beautiful trade. We've already pulled half off, so this is not capable, in my opinion, of jumping in and chasing this trade. We're looking for something that's newer, that gives us an opportunity. QLD here, trade from about a week ago, is already up 7.54% and already pulled half of the position off. And then we have UPW is off 0.67 and is short from about a week and a half ago. So this one, because we are technically close to our entry price, and we have not seen any real gains yet, this theoretically could be a viable entry. We could still get in, still have our risk levels in place, our target levels. Remember, this trade protection level becomes a soft stop level or a trade protection level. We have no hard stop yet on this trade. A hard stop is a real active stop order. So for example, on QLD, we have a hard active stop order already at 39.26, whereas our protection stop level was at 39.65 and our entry was at 39.26. So we've moved our stop on QLD right up to our entry. Okay, so now let me show you what I would do next. We have a couple of trades here that are doing pretty well. Like this SPUU is up just at 2.37 and 1.95, right, for SSO. So first off, what I would do is come up and take a look at the rotational modeling system. Rotational modeling system for SPUU is bullish, perfect. The rotational modeling system gives us a long or short, always in trend following system. So we theoretically do not want to take any long trades on the regular live trades triggers unless we have some confirmation that the rotational modeling system is actually confirming this upward trend as well. And SSO is also showing us that we have a good solid long trade here. Okay, we have no take action scenario in the rotational modeling system. Ideally, we want the rotational modeling system to be able to catch some of these bigger trends. And you can see here AGQ has been in a trade for quite a while here, 23%. BIB has got in a trade a little while ago. It's off 7.69%. Boyle has been in a trade since December 6th, is up 75%. Wow. CHAU is in a trade from November, up 26%. CWeb is in a trade from November, is up 86%. I mean, guys, really stop and think about this. You know, these rotational trades and these Mint live trades provide you some real solid opportunity. Yeah, occasionally there's going to be some risk involved, a -10, a -12, a -15% trade. But remember, if you're coming over here and you're using this structure, -10% on a $6,000 trade is a $600 loss roughly. And you need to understand that given your total account, you have 20 total trading slots, that $600 loss off $127,000 trading account is really going to break down to 10% risk off of 20. So that would be 0.25% loss, a 1/4% trading loss. Okay. So now, two things let's look at. So we looked at the new triggers. We looked at the rotational modeling system. Now let's see if any of these trades match the pure alpha trades. There's only one trade that matches the pure alpha. Pure alpha trades are essentially a ranked trading trigger. This is a January 20th. We got into FNGO. That was only a week ago. We're up 16.15%. I wouldn't be chasing this trade, even though we have the opportunity to do so. The real reality here, ladies and gentlemen, is pure alpha trades are very opportunistic trades when they show up. So let's go over here to 3X bullish ETS. Let's take a look at pure alpha first, see if we have any new trades. TECL is a pure alpha trade, up 9.8%. We just got out of TNA, it looks like yesterday. We would have to look at the last trade, but it looks like it's about 5% looking at this. And URTY, we just got out of a trade yesterday. So we have no new live trades here. we could come back over here, go back to standard modeling, go back to new triggers, and see if we have here, we have a new trigger here, DFEN. Okay, we have a brand new trigger as of this morning, 2120. Last price is 2075. Let's see if it matches with our rotational modeling system. DFEN matches the rotational modeling system. It does not. Let's see if it did not. Oh, it did match. Wow, on the pure alpha. So DFEN is a pure alpha brand new trigger that matches what we can use for a trading system. It gives us an opportunity to get long at or below 2120 with a protective mental stop level at 1990. Now, understand that this is the type of swing trading that is available to you under the Mint Live trades. You not only have the ETFs, you have the foreign ETFs, which I love the foreign ETFs, ladies and gentlemen, particularly the rotational modeling system, which does very, very well. You can see these numbers, 31%, 46%. I mean, break your trading across some of these foreign ETFs for these rotational modeling system, because remember, you're going to see some very big numbers, and they're just waiting for you out here. Okay, how do you get to them? It's very, very simple. I'll show you here in the next section. So you have 3x ETFs, including foreign, 2x ETFs, bullish and bearish, stock lists, including the core and the inverse and the value. So take a look at the core ETFs. Let's go to pure alpha. No pure alpha trades. Let's go to new triggers. Hack, we have a new trigger as of about a week ago. We've already taken half. Remember, I suggest don't chasing them, not to chase them after they take their half positions. And that QLD, January 20th, it's already taken its position. But again, look, we've already seen 7.5%. We're already seeing 4%. These triggers update every 15 minutes, and they're there waiting for you. Literally hundreds of triggers. NASDAQ list, Pure Alpha, gone flat, Costco. Trigger as of about a week ago, it's already gone flat for half. It's up 3.14%. CSX is a new trigger a couple of days ago. It's off 2.88%. This is a pure alpha trade. This might be a good trade still. We can get in actually below or above our entry price. Entry price 30.95. Yeah, above our entry price because it's short. MCHP, which I believe is MailChimp, is up 1.26. It was a trade a couple of days ago. Has not had any action yet. This is, again, a good, solid entry for you to be able to consider taking this trade. Tesla trade just yesterday, right here. It's up 4.49%. So pay attention, ladies and gentlemen. These trades are just sitting out here waiting for you. That's the end of the pure alpha trades. On the rotational side, you've got a whole bunch of triggers, and a lot of them are going to be up and down depending on how the market's rotating. Of course, the NASDAQ is flattening out, starting to move into a new trend. But remember, we want to stay very cautious. A lot of these trades, ladies and gentlemen, are just, and you will notice this, that when the markets are flat, Mint Live trades will not produce a lot of great, I don't want to say great, they will not produce a lot of triggers. The rotational modeling system will always produce triggers because it's always either long or short. It's never flat. But the pure alpha and the standard modeling system will not produce a bunch of trades when the markets are flattening out or going sideways. Things tend to get very, very quiet. But again, what we're looking for is to catch some decent trades, and what you want to focus on when learning to do this is pure alpha and rotational. And now once you've learned those and you scan those, then go back to either the new triggers, which are the newest standard modeling system, or just click on standard modeling, and generally the newest triggers are up near the top. So here's the newest triggers right here. ADP short from yesterday, 222.35, 222.82, still a brand new trigger. You can see how consistent the system has been over the years. This is a valid trigger, a valid short trigger right now. We'll see how it plays out. AMGN, a trigger from a few days ago. It's up 5.62%. I wouldn't chase it. BIIB is a long trigger from about 5 days ago. It is negative, meaning it has not turned into any profit. We don't have any take action yet. You can see that it's got mixed up a little bit. This is still a viable trigger. It's won 6 of the last 6 trades. So it's still a very viable trigger if you wanted to take it. Of course, you want to make sure the rotational modeling system is still, for BIIB, is long, and sure enough it is. This is a viable trigger, ladies and gentlemen. Okay? Okay, now, how does this work? When you get your analysis, and again, this is going to be changing. This is how I had been delivering all of my free research through Mint Live Trades. Now we have a new service called the Expert Growth homepage. So what you get over here under Live Trades is you get the video analysis, which loads up all of my videos for you. And you also get the weekly summary, which is all of the hot list, indicating the Mint rotational modeling system setups, triggers, and trends. The allocation levels, remember this is your trading allocation level. You would theoretically be running a fairly large amount of money into the Mint rotational modeling system. That would be your retirement account. And then down here we have the historical results of the Mint rotational modeling system. But all of these charts and data and research is delivered to you in the videos as well. These are just hard copies of the charts for you to look at and review and pay attention to as you're reviewing my analysis. Okay, so now over in the Expert Growth homepage, pretty much you get the same thing but more. And again, what I'm doing in here is I've broken this down into 3 components, okay? You get the updates, where I deliver the updates to you every weekend. This was the last update. You can see that it's very detailed, moderately lengthy, plenty of information in here for you to understand what's going on over the next 2 or 3 weeks, if not longer. And then here's my SPY cycle patterns. And of course, we are right here in rally mode right now. We just completed this inside breakaway day. Okay, so here we go with rally mode, and these are the longer term cycle patterns, which is why I believe we're not going to see anything really until we get to this 2027, 2028 peak phase right here. And of course, it gives you links to my websites and my YouTube channels. But lastly, I want to point out that it gives you links to my videos right up here. Watch my videos. My videos are very, very important. Okay. Now, under the member resources, you get the video analysis, which is links to my videos. You get the custom indexes, which is all of the custom indexes again. You get the hot lists, which are the TT scanner hot lists, giving you the ability to see the weekly swing trade setups that are occurring. And you get access to the TradeTank.com message board, which is my member customer service, or let's just call it a message board, where you can share and explain and talk about what's going on in the markets. So ideally, what happens again, ladies and gentlemen, is we have a top layer, which is the investment modeling system. And then we have a bottom layer, which is the trading system that allows you to take your own trades. And what I'm teaching you to do is to understand how to trade more efficiently by managing risk, seeing what's coming, and protecting your capital. Ideally, over 5, 6, 7 years, possibly, if you stay with me that long, we will navigate the markets very, very effectively, trade very, very effectively, and hopefully average about 15 to 25% return on investment a year without breaking a sweat, without getting trapped in an unwanted series of losses or blowing up our account and quite possibly even beating those numbers as the market gives us the opportunity. The goal here is to educate you, keep you calm, show you what's going forward, and allow you to use the resources that I'm teaching you to become much more efficient at making money in the markets. Remember, the long-term success is being able to ride out the market trends efficiently. In fact, I've created this expert growth worksheet, which is 7 pages. Let me drag this over. It's really 7+ pages of content teaching you how to use what I'm showing you, how to develop the right psychological mindset, how to trade effectively, basically a little bit about me, how long I've been in the markets. Well, short story, I started programming when I was 14, 15 years old, before I could drive a car. Started working on Apple II systems when they first came out in 79, I believe it was, shortly after they first came out. As soon as the schools got them, we got our hands on them. From then, I've pretty much been self-taught. I've learned a dozen different programming languages. I've built hundreds of different applications for people. My focus is in predictive modeling, AI, advanced learning, quantitative modeling. And what I'm trying to do is teach you how to become proficient in reading the tea leaves and learning to become an efficient trader. So example, if you can get over a period of time, okay, this is from 64 months. How much do you think you'd have after 64 months? Now think about that. That's 5 years, about, okay? If you could do 3% a month on average over 5 years, $5,000 turns into $33,000. If you can do 3% a month on average with $150,000 over 5 years, that turns into $1 million. Okay? If you can do this and protect your capital and shoot for these numbers, these 3 to 5% per month, moderate ROI, being very protective, you can grow your account from 150,000 to over 3 million in about 5.5 years. It's just a matter of waiting for the market and learning how to take advantage of market trends. Okay? All right. Well, I invite you now to come take a look at it. You know a little bit more about what I do and how it works. My goal is to educate you. I'm not going to go out and tell you, hey, you need to buy this, you need to do this, you need to do that, you need to do that. My job is to show you what I'm seeing, to give you the advice, to show you the data, and let you make the decisions. Remember, follow this level. If you hypothetically had $250,000 in your account, and I was recommending a cash reserve of 70%, then you would theoretically be based at this level, protecting your capital so that you do not have excessive risk. Okay, but if you wanted to be a little bit more aggressive and keep your investment accounts working, you could readjust this level, say down to 55%. That gives you the ability to have a little bit more into your trading account and a little bit more into your investment account, and that still gives you the opportunity to trade and protect and execute the plan, which is your job. I'm giving you the information, you make all the decisions. But remember, if I'm telling you to protect 80% of your capital, there's a reason I'm telling you to protect 80% of your capital, okay? And it's because there's excessive risk. You want to scale back your trading, you want to scale back your risk exposure, and you want to wait for the markets to set up and give us the opportunity to move forward. Eventually, I will move back into a scenario where we'll be back into 20% cash reserve, meaning we're going to catch the bigger move to the upside, and that's going to give us more opportunity to actually trade. We definitely want to wait out the risk in the market before we blow up our account. Okay, guys, I hope this is helping. Next, I'm going to do the cycle patterns. You guys have all asked about my SPY cycle patterns. A lot of you are very excited about this. I am too. I think I am in the process of unmapping some Gann and Tesla and Fibonacci cycles that have been overlooked for decades. And again, that's part of what you're doing. When you subscribe to my services, remember down here, when you subscribe to my services and support me, what you're actually doing is supporting my research and my development to be able to deliver this stuff to you every week, okay, and every day. My server runs constantly trying to deliver all of the algos for you, and the server is, like I said, it's not moderate, it's not super expensive, but again, I spend literally 35, 45 hours a week building content for you to deliver on Sunday and staying abreast of what's going on in the markets. I hope you guys enjoy. I hope you guys are getting a better understanding of what this is. And now I'm going to go into the SPY cycle patterns, try to explain those to you without telling you how I do it. All right, guys, thanks a lot. Bye.